Hi everyone, welcome back to our YouTube series InvestED. Today we're going to talk about some of the risks associated with investing in bonds. And so there are two important factors that we look to help determine the risk return profile of bonds. The first is who is issuing the bond. Similar to how an individual would be assigned a credit score that highlights how likely they are to repay their debt, institutions and governments are assigned credit ratings to highlight their creditworthiness. Bonds from governments with a good borrowing history are often rated risk-free. They're considered high quality because they're almost certain to repay their debt. Meanwhile, bonds issued by governments or companies with higher debt levels or more volatile revenues are viewed as riskier. In order to compensate the investor for this additional risk, these securities tend to offer higher yields than these risk-free bonds. So the other factor that's important is how long the bond is being issued for. All else being equal, bonds issued for longer periods of time tend to be more sensitive to changes in interest rates than those issued for a shorter maturity window. Bonds with longer terms generally offer higher yields because as an investor, you're taking on additional uncertainty that comes with investing for a longer period of time. And so that concludes our session on what risk factors are important for bond investors. And thank you so much for joining us today.